Mohsin, welcome to the podcast.
Thank you so much for having me. I'm excited for this.
Yes, so are we. We would like to get started because with your background. I mean, you are a consummate real estate professional. You come from real estate in your family, and you have taken it upon yourself to enhance real estate with blockchain technology. So we're really excited to get into it. But let's begin with your story and your backstory. How did all of this begin?
Sure. So, I was kind of born into real estate in ways that my family has a real estate investment company as part of the many other businesses they have. And the one thing that always had piqued my interest was real estate, and always real estate. My first real estate job was right after eighth grade, summer break right before ninth grade. My dad told me that I needed to manage two of his buildings, commercial office buildings, and I needed to understand how that process worked. Now, this was in Pakistan. And so the way property management happens over there is very, very different than over here. But that was my first fully immersed experience within commercial real estate. And as much as it was difficult to get used to, it kind of made me fall in love with real estate even more. I went on to study at York University, where I went to business school. And so my focus was purely finance and real estate. And that's what I studied. And as soon as I graduated, I moved to Dubai, where my family already had investments. So I started heading investments across the Middle East. So that was UAE, Bahrain, and Qatar, with a real focus on the UAE. So we had investments across Dubai, Ras Al Khaimah as well, which were some of the not so well performing ones, but an upcoming area nonetheless. Very quickly after that, we had the recession or the global meltdown that happened back in 2008, 2009. And as that happened, that opened up opportunities for expanding our real estate investments. And as we started to see some assets starting to be non-performing, I started to manage global assets for our family's holdings. So I went from not just from the Middle East to across Asia, Africa, and Europe as well. Made my first investment in North America on behalf of the family in Toronto, which was back in 2009. That was a very small investment just as a test case on how the North American market's doing. Surprisingly, Toronto was one of those markets that was least affected by the financial crisis back then. Prices did not fall very sharply. They were steady. And so there was hope for growth very quickly. But as I started investing in the Middle East, in North America, I started to focus across the West Coast. I ended up moving to LA, started investing in LA, in Scottsdale, and in Reno as well. So those are the three areas where I was focused on all the way up until 2014. That's what our primary focus area was. In 2012, we made our first investment in the Midwest as well. So we started to explore investments across the Midwest in 2011, end of 2011, early 2012 or so. We kind of shortlisted Southwest Ohio as the area that we really wanted to be in. And that was for a bunch of different reasons, which included the strong economic backbone that Cincinnati had, the 20-some Fortune 1000 companies that were based out of here. So all of that kind of played into the reasons why we chose Cincinnati as the hub of our investments that early on. It wasn't until 2014 that I actually ended up moving to Cincinnati. I separated from the family holding company and started to syndicate myself. I started to raise money from friends, from family, and start to do smaller multifamily and mixed deals and assets. So 30 units to 50 units, sometimes up to 75 unit buildings as well is what I was focusing on. So built that portfolio up to about 50 mil of assets under management around all the way up until 2019. And that's when I left that and kind of focused purely on AKRU 100%. And it's during that journey that I came across what blockchain could really do for real estate. And it's during that journey that I had the aha moment of, oh, we could really utilize this technology and we could really enhance the experience all within commercial real estate as we deal with it right now. But yeah, that's a quick background on me and my real estate journey so far. So nearly a couple of decades of real estate investing for me.
Yeah, wow, that is incredible. Really, that global experience of investing must have taught you so much about the way that real estate works just in different countries, and even like regulatory, which we're going to get into a lot with blockchain and secondary markets and everything that's going on. And also getting into the Midwest that early, good for you, because people have just been discovering that really over just the past couple of years. So really goes to show how much research one needs to do to get into a new market, and the conviction that you need to get in so early.
Yeah. So see, hindsight is 2020. And now when we look back at it, we could have invested in Columbus or in Nashville and values would have been much higher. But we still stand strong and stand by our decision of picking Southwest Ohio versus any of these higher performing cities. And the reason for that is, again, all the research that we had to do and everything that we had to look out for. There were some certain things which are as little as how many major league sports teams does a city have, or what's the size of the university that's within a certain city or around a certain city, and what all does the city support as well. So as simple as things like that, going deeper into the true economic backbone and what the city can sustain, all of those things really help you make the decision. And investing in the Midwest is very different than investing internationally. So anywhere else across Asia, across Europe, across the Middle East, or even across the coast. So majority of your mature real estate markets will have negative cap rates, right? Where they will have, you're usually investing in real estate for tax benefits as well as growth over time and value of the asset, as well as inflation hedging, right? When you're looking at investing in the Midwest, or when we started looking at investing in the Midwest, we're talking about massive positive cap rates, 18, 19% year on year, without including any gains by the sale of those assets, and you just don't, you can't find that anywhere else, not even in developing countries, not even in all cash countries. If anything, there your cap rates are even further below zero or even more in the negative. So the Midwest was a great place for us to venture into, and it was a smaller venture comparatively, but it's made all the sense so far.
Let me jump in, because I think that's a point that we should emphasize, right? Because in the US, we currently live in this environment where everyone talks about cap rates compressing at crazy rates, and then pricing appreciation, et cetera, et cetera. And every time I chat with a group outside the US, I hear a similar sentiment of like, well, in my country, like, we've been buying at 2 caps, that's the best you can do, right? And so my question for you is, why is that the case? What's the difference between buying at a negative cap rate in the Middle East as opposed to buying a 5 cap in somewhere in the Midwest?
Yeah, so it's not just the Middle East. You look at, that's negative cap rates as well. You go to New York, or you go to LA or San Fran. San Fran is now negative on a lot of the assets as well. But you're not looking at more than 2 cap, or if you're lucky, a highly levered asset would be a 3 cap, if anything at all. In all the other mature real estate markets, be it Hong Kong, be it London, be it Paris, be it immature markets like Dubai or even others, you're using leverage to increase your buying power. You're not using leverage to increase your return. You're truly paying a price for increasing your buying power, so you have the ability to buy larger assets, right? In the Midwest, the way that assets have been valued, or the way that how quickly they're devalued and then they've started value up again, that kind of created that delta of high cap rate. Even at the midst of the financial crisis, LA and San Fran didn't have anything better than a 6 cap. You were sub 5s very, very early 2010, 2011, already looking at sub 5 deals from that perspective. When you get into the Midwest, the value of the land and the value of the building is so much lower than the rents that you can receive. That's what kind of results in the higher cap rate. People over here don't have the either they don't have the ability to buy, or they don't want to buy because of whichever reason. They'd rather rent from that perspective, be it office, be it retail, be it multifamily, even for that matter. And as those values of those assets are increasing, you're seeing that cap rate compression where those rates are going down. When we started investing in Cincinnati, I think I mentioned this earlier, we're looking at 18, 19, 20 caps, maybe even higher in Class C multifamily buildings. Now, you want to do a decent deal, Class B, Class A, you're looking at 5, sub 5, any given day, even in a market like Cincinnati. Yes, we're one of the top 30 largest cities in the US. Yes, we're growing faster than any other Midwestern city at this point, but that still doesn't explain how low those cap rates have dropped over the last 10 years. The increase in the value of the real estate is what explains that more than anything else. So.
Yeah, we're seeing some of the same, obviously, and we're doing some investing in Midwest markets, especially in single family rental. That's a newer asset class for us, and because better cap rates than multifamily. But I would like to jump into the journey of AKRU, and if you can tell us what AKRU is, and I guess how you came into blockchain and what propelled you to create a blockchain-based real estate company.
I think it's key for me to tell you how AKRU started over here. 2018, 2017, I dealt with a couple of redemptions because we were so tightly knit in terms of our investors, all friends and family. We didn't have any protections from redemptions for us as a sponsor or as a GP. They were very friendly for everyone. And one of our larger investors had faced some personal issues. And for that reason, we had a couple of major redemptions, which really affected the capitalization of a couple of projects that we were working on at that point, and the projects that investor was involved in. That caused me to go around on a fundraising tour or road trip. One of those stops was in Toronto. I was meeting with one of my old friends from school, as well as one of my investors. And he's like, well, and I was telling him, hey, this is what happened. This is what's going on. He committed some money. At the end of the dinner, he was like, hey, what do you know about blockchain? And I was like, I bought a Bitcoin back in the day, and I'm holding on to it. And that's been my only exposure to crypto. And that's about it. It's like, no. I'm talking about blockchain, like the underlying tech. So tell me about it. I don't know anything. And as he started to explain things to me, it was like the immutable ledger, the ease of transactions. And it's like, wow, this could solve a lot of things for me. Like, you're really bringing in trust in the trustless environment. So now I don't just have to go to friends and family who trust me with their money. I can provide that trust with that proof of ownership of sorts on that immutable ledger. Would never have to deal with redemptions because now we can create a coin of sorts that people can go ahead and trade it when they want to sell it. The minimum investment for our fund was $250K. So we could really bring that down. Like, initially I was thinking 25,000, 50,000 or something on those lines. Like, we could really open up the space for other people to invest in this area as well. I do understand finance a little bit, and with all these private placement offerings that we've worked on before, give me the little bit of knowledge to know that what I was trying to do was going to pass the Howey test any given way that I tried to put it. And so this was going to be treated as a security. You have people who want to run away from regulations, and then you have people who want to comply with regulations. And then but what regulations do apply? That kind of set us on a journey of, if we're going to do this, we need to make sure that we're 100% US based and we're 100% compliant. We don't want to be one of those companies based out of Singapore or Thailand or even any of the Caribbean islands or anything on those lines. We want to be based out of the US. We want to be compliant. We want people to feel secure and safe when they're investing with us. And that led me to the journey on learning more about blockchain as well. So I started to read more about blockchain, read more about the distributed ledger, read more about how different blockchains are different, private versus public, Ethereum versus Hyperledger was the initial conversation. It's like, well, all of these other chains are out there as well. What should we look at? What should we not look at? In that process, I picked up a program at Oxford University at Said Business School with some very knowledgeable people in the space, which include Andrew Baum and David Schreier. They're industry experts for the last, 7 years, 8 years within the space. Got a lot of learning from them. The programs that I did there really helped out, including blockchain implementation strategies and their fintech program. That really helped us structure how we should put this product out there. So the multi-token architecture that I brag about or I talk about, or which is very unique to our platform, is something that I learned about from there. It's like, well, you could have multiple tokens doing multiple aspects to it. And so my blockchain journey kind of started to expand from that point onwards. Now, while we had some of the best attorneys within Cincinnati to represent us with the regulators, so SEC, FINRA, CFTC, have conversations with them on how we could come up with that compliant platform, we also started on a search journey for finding the right product engineers, for finding the right team members for it. We looked at third-party solutions with Harbor and Polymath and Security on whether we should integrate those. We looked at utilizing services by Consensus. We looked at utilizing services by other larger blockchain development houses or software development companies. The conclusion that we came to was this is not a product that people with a set mindset would be able to develop. There's so many complexities within it. There's so much that's happening. There's the real estate side of things, and real estate transactions are very unique in their own way. They're not something like, if you look at technologists developing a platform for real estate transactions, that's going to have the technologist's perspective on it. This is the most efficient way to do it. Why are we not doing it this way? Why do we have to have these certain inefficiencies in the process? Or why do people need to negotiate the price? Crypto does it, or stocks change just by a buy-sell matching service. Why is real estate never going to be such a liquid asset that it'll be able to trade over the desk? Or my perspective is, no matter how much liquidity we add to it, it'll always be over-the-counter trading for it. It would never be a matching service exchange product from an investment perspective. And even then, that's a lot of liquidity within the space that needs to be achieved and that needs to be added even for it to work properly as an over-the-counter product. So when developing the platform, we went all the way from what the structure needs to be from holding these assets. How do we ensure that the liability from one asset doesn't flow over onto the other? If there's a fire in one building and someone sues that asset, that liability doesn't go over. Or if there's a bankruptcy from one of the key investors in one of the assets, that doesn't flow over to all the other investors within that asset. And how do we protect everyone, all the investors on there? As well as how do we stay within your money transmission laws? How do we not come up with a stable coin and yet keep the entire transaction on chain? How do we ensure compliance, and how do we ensure ID and KYC and AML and accreditation verification and all of those things? So we went ahead and we hired our first engineer. We took that leap of faith August 2019, once we had an agreement with the regulators on what the pathway would be to open up to retail investors. Now we're a team of 28 people across 3 different countries, 3 different continents. So it's been a very interesting journey, to say the least, but I'll let you delve into any other questions.
Yeah, no, you covered so much. And the question that comes to my mind is, it seems like no one's been able to create the secondary market efficiently enough for real estate. So, I mean, aside, and obviously there's regulatory, there's monetary, there's so many things. I mean, I think the most liquid that exists is a REIT, which is very different than what you're talking about.
Right.
Can you speak a little bit to why you think that blockchain could be the solution to creating liquidity and a secondary market where it just hasn't been done before? I'm really curious, like, right. What is it about blockchain you think that's going to make this successful?
So before I answer that, I've got to tell you what exactly AKRU does, right? So AKRU has not just the initial offering, but also the secondary marketplace. So exactly what you're talking about, the liquidity aspect of it. So we fractionalize assets down into $1,000 initial token offering price. So you could have $1 million asset with 1,000 tokens, could have a $100 million asset with 100,000 tokens, initially being offered at $1,000. We did not want to get into a buy-sell matching service of sorts, like your traditional exchanges where REITs get traded, or even your blockchain-based ATSs at this point. They're great services. I just think real estate is a completely different product. Real estate has different expectations. People need different data points. Your red and green charts are not going to get through to a real estate investor. That's not what they're used to. That's not what they're what they're looking for, they're looking at trying to find out what the occupancy levels are in a building. They're looking at trying to find out what your operating expenses are, what part of that is fixed, what your net operating income is, and how are you calculating that? What are the reserves on it? And then they're trying to look at what their equity multipliers are, or what their IRRs are based on a 1 year, 5 year, 10-year hold, or what their cap rates are, as more commonly referred to when people are talking about commercial real estate apps, right? And all of that information just cannot be made available at the time of a single trade on a traditional exchange. All that you're going to see is a ticker and a price that's going to go there. Real estate investment decisions are not made based on a ticker and a price and the liquidity within that asset class. You need to know what you're investing in. So AKRU kind of went a slightly different platform, right? in a slightly different direction, right? So we said, hey, one, we're going to let you invest in an asset of your choice. It's not going to be an obscure portfolio. It's not going to be, or even even if there's transparency on the portfolio, it's not going to be something with thousands of asset management fees, thousands in asset management fees, or first, second, third tier fees in there. What happens in the REIT? There's a REIT that invests in a fund, which then invests with a sponsor, which then invests in a deal. And then every layer has its own set of asset management fees. And so an asset which may actually be spending, 8% annualized return, by the time a shareholder sees the return, it's down to 2 or 3%. And that to aggregate it over their entire portfolio. So we wanted to make sure that we gave people the ability to get into single direct investment. That is a key and unique aspect as to something that will enable that secondary market to work, right? We also gave the ability to people to be able to tokens at their own pricing. They're not bound at selling it. This is what the market price is. Your Facebook share or your Apple share is now $1,000, and that's all that it's going to you can sell it for. That's not how real estate works. Real estate also has a lot of sentimental value for the holder for it, or it also has that ownership aspect that comes in with it as well. Real estate location could change the value of the asset completely. Location. So you could have your real estate building in the heart of Manhattan, which is an office building that someone bought the initial tokens at $1,000 each, but 5 years later they want to sell it at $5,000 or $10,000 or $12,000 each. And while there's no other tokens available for that building, and that may not be the price guidance that we would have provided as to, hey, this is what the value of it is. If they want to list it for that, they should be able to list it for that. And if Dan wants to go in and put in an offer instead of $5,000 for $4,500 that he's willing to pay for it, he should be able to do that as well. That's what has been missing in a lot of these exchanges and a lot of these secondary market efforts that have gone on there. Now, we're able to do all of this because of the efficiencies that get brought into the transactions by using blockchain. And that's where the blockchain aspect comes into place, right? I started off with this, right? The trust within the trustless environment, that aspect really comes into play. Why would someone trust, AKRU or any other company? What if AKRU shuts down today? What if, what happens with the bus factor kind of comes into play, right? What would happen to their investments? What would happen to the record of their investments? Who's going to have that record? Right now within the stock market, you've got transfer agents who've got those records. And that what happens if that TA gets hit by a bus, or if they get hacked? There's no real record, no reliable record that one can rely on. That's why you don't have those transactions taking place that efficiently. Then there's the matter of, how do you transfer funds over, and how do you put in an offer, and if someone accepts it, how does that transaction take place instantaneously? That just doesn't happen with traditional payment rails. You could go on Robinhood, you could try and deposit money, your money's stuck there for 3 days, and you can't buy your stocks for the next 3 days. On the AKRU platform, you can buy your real estate tokens instantaneously. You can, when you're committing to a price, so if Dan offered $4,500 for my token, Dan needed to have $4,500 in his account, which are available at that point. And that $4,500 would transfer into my account the moment I click accept on that offer. and my token would transfer over directly into Dan's account or wallet instantaneously. Now, it's efficiencies like these which did not exist previously as well. The immutable ledger is an absolute integral aspect of it. While we are still struggling with the regulators on things like transfer agents, why do we need it? That's what the public ledger is for. That's what the public blockchain is for, and that's why we're not on a private blockchain. This is more secure data than majority of your TAs out there, who at the end of the night would put the entire data on a flat file on a USB, on a flat Excel sheet or something on those lines on a USB, and that's going to be their cold storage for the night for that data to keep it secure. Now, that's not secure in any way or form, in my opinion. So blockchain has a lot of roles to play in it, whether it's ID, the ID aspect of it, making sure you know who you're dealing with, the KYC aspect of it, accreditation, verification, depending on what part of the regulation you're in or you're playing with, all of that comes into play. So compliance and accreditation and ID become very integral parts within real estate as well, right? So it's not like Bitcoin where if I have the coin, it's mine, and if you have the coin, it's yours, or if Dan has the coin, it's his. We need to know who has the coin at which point in time, because they are going to get some kind of distributions out of it. They're going to get some kind of tax form at the end of the year out of it. In case someone passes away, you don't want that coin to disappear in the form of, oh, we don't have the private keys for this, so how do the heirs get access to it? Or in case of a legal battle, if you've won a battle against someone who does have real estate holdings in the form of coins, how do you get access to it? It's not like it's sitting on some cold storage on a Trezor ledger that only he or she knows that this is what they have. So all the complexities within transactions get streamlined when using blockchain in the specific way that we are. And so while blockchain is open source, while it is, or a lot of the public blockchain, all the public blockchains are open source. You have access to all the information. Anyone can go on there and code on it. It's the architecture and the structure, the way that the product is done is what is key. We're not a decentralized product. We're a very centralized product. So it's about using the technology most appropriately. It's not about using blockchain because it's a buzzword technology. It's about using it for what its benefits are, and that's why we've used it appropriately, and that's the right use case for it, and that's how it's helping us out.
I'm really interested to get your thoughts on a certain dynamic, right? Because people have been trying to create this secondary market for otherwise liquid real estate for a really long time, right? And from my perspective, one of the big issues has always been the information gap, right? And a joke that we kind of make internally all the time is like, in the public markets, the stock market, you trade on inside information, you get caught, you get fined, maybe you go to jail. In real estate, you go right to the bank, right? These are private transactions. People trade on inside information all of the time. And so when you try to take an industry that functions in that way and create what in effect looks like a public marketplace, how do you get over that hurdle, right? Especially because if I'm an individual investor sitting here in Nashville, right, and I want access to a multifamily apartment building in California, how do I know what's going on? How do I know how to value? Should I pay $4,000 or $5,000? Like how do you think about investors in your product? How should they think about that question?
Yeah, so Dan, you bring up a great point. Data integrity, the data flow is absolutely key. How do you ensure that you have access to the right data? This is one of the things that I was talking about earlier. It's not like the stock market where you're trading based on what the market value is. This is where investors need access to information. Investors need to know how the asset is performing, what those numbers are, what collections are, what your expenses are, what the whole nine yards. And that's something that we've truly worked to streamline on our platform. We've created API integrations with all the major asset management softwares out there, be it your AppFolios or Yardies or rent managers and the whole nine yards. We've created integrations with them so we have access to real-time data. We've created third-party partnerships with companies like Invenium Capital so we can validate that data and so that we can ensure the integrity of that data. We've put in place the right checks and balance with partnerships with companies like JLL, Cushman Wakefield, to come in and run quarterly appraisals on these assets so the right data points are available to the investors. We bring in an additional layer by a fund administrator coming out and provide price guidance, which is a derivative of the data that we're looking at. One thing that we always have to look at is garbage in equals garbage out when looking at data mining or data processing. So the integrity of the data is as good as the integrity of the person putting the data in. So we've tried to minimize as many points variation as possible. So we're currently working with some of the larger asset management softwares to have built-in payment processing by our platform on there. So for instance, we're running a test right now on a small building, which is a mixed-use building, a 10-unit building, where all the tenants, it's an integration with the rent manager, and payment processing, instead of happening through rent manager's other APIs, is happening through the AKRU property management side of things and payment processor. So tenants go on, log on to their tenant portal, which has their rent manager information on there, as well as maintenance tickets, and all of that goes through the AKRU platform, and their monthly rent payments run through their AKRU platform as well. So invoices still get generated from the rent manager as the asset owner would traditionally do, but payments get run through the AKRU platform. So real-time data being available on what's really happening is absolutely key. And as we do this, we're also training our AI algorithm that we've developed. That's a big aspect of what we've developed. It's not something that we talk about today as often as we should, I guess, because it's not something that we can fully rely on right now. We've built an AI algorithm, a data engine, where we're mining data constantly in terms of how an asset is performing. And we're building in more and more integrations with IoT devices for monitoring usage, for monitoring the financial health, for monitoring the utility consumptions, the traffic flows within each asset, which then gives us insights into more real-time data on how each asset is performing, not just from a financial performance side of things, but also from a usage side of things, or from maintenance side of things. If, based on, we're running a pilot on this, again, that's on a 2-unit building, based on IoT devices that we're installing, is like, if the water consumption increases in each unit by X amount, and we've kind of put in what kind of fixtures are installed in each of the units, what the traditional water consumption should be. If there is a leak, what does that mean? How that would affect the utility bill, what that means on deferred maintenance for the building. And so, we're having early detection on maintenance aspects of it as well. So having access to real-time data that is verified and you can rely on the integrity of the data is absolutely key. And that's what a very important role on how the primary and secondary market transactions would take place or are taking place on the AKRU platform. And the availability of that data is absolutely integral, no questions asked.
So you're wearing a lot of hats, right? So you're going out and you're finding asset owners that want to get liquidity in some way, right? That's not a recap or a refinance, and you're tokenizing. And then you are, facilitating the sale of those tokens to investors. And then you're also overseeing and managing the trading of those tokens between other investors, right? And so everything's kind of done under this one roof. As you think about the future of blockchain and real estate, where are the bottlenecks, right? Do you think this industry will evolve in a way where someone controls everything, or if you'll have bankers who bring properties to your platform and you manage the trading? What do you think the end game is for all of this?
Yeah, so we don't want to be someone who's doing everything. That's not who we are. We're just a platform that's connecting investors to asset owners, that's connecting service providers to assets themselves, that's providing the integrity within the data, and that's providing the information that people need to make those trades. Initially, we have to build up that marketplace. Initially, we have to build up that platform. Be it our partnerships with some of the larger financial institutions out there, top 10 banks, be it us bringing lenders on the platform so people can borrow against their security tokens. We have to do that. But as we build the infrastructure out, as the platform builds out, and as more and more adoption takes place, our role reduces significantly in those operations or on connecting that, being more active on that second market side of things or on the primary offering side of things. As the ecosystem grows, as the community grows, they start to, it becomes a well-oiled machine and starts to function on its own. Having said that, the way that we've structured the platform is in a way that we ensure that there is the integrity aspect of the data is there, the integrity aspect of every deal is there, so we underwrite every deal appropriately as well, but it gets as streamlined as possible from an operations perspective as well. So just to give you, and I was just doing this diagram a little bit earlier. So this is like the AKRU structure, and I was explaining it to someone else as well on how on the different entities that get involved and how each entity works with each other. So you've got like AKRU platform all the way up top, and then you've got your BD, you've got your exchange, you've got your TAs, you've got your management, and then each one has its own sub entities as well, which are then having separate functions and functionality associated with it as well. So management having each of the SPVs underneath it. So there's a lot to it. No questions asked. That's the only way you can disrupt an industry as large as commercial real estate. It just can't happen with, oh, here's a platform, come and list your assets. Figure out compliance on your own, figure out reporting on your own, figure out how you're going to talk to your investors on your own. That's why real estate is such a complex aspect. And that's why you need a very complex solution to enable the right secondary market and to make it work.
So I have a question. This is so interesting to me. I'm trying to think about, as an investor, you're providing all of this data and monitoring and really granular, which is so important. And the guest that we had on before this episode gave a whole illustration of Internet of Things and a blockchain and even AI and how all of this is getting integrated. And the world today runs on data. As an investor who's coming in and I'm thinking, I want to buy one of these tokens, how important do you think it is to that investor that that data is there? And will they trust you, or will they be doing their own due diligence, right? Because we want investors, I mean, especially at Alpha, we tell people this all the time. I mean, you have to know what you're investing in, which is true of everything, right? And it's just that ETFs have made stock investing something that you do without thinking, which I don't know if it's good or bad. It definitely grew the industry. So I guess my question is around this idea of, if I'm an investor, I know you're doing all of this, I want to buy in. Am I going to go and do all my due diligence on this one token, or am I buying because I want to diversify? I want it to be easy. I want to be able to turn around and sell it. I think it's really interesting to think about all of those elements, and to what degree will people not be underwriting at all and just be trading?
So look, you brought up how ETFs made capital markets a lot more active and increased the market share on that front. ETFs are something where people don't want to do the due diligence. People don't want to read up on what they're investing in. And then there's other investors, or you have your larger funds or hedge funds or other folks who are really doing their due diligence before they're making their investment decisions. We think the platform is going to have both aspects to it. You're going to have individual investors who are really going to want to do deep dive due diligence on these assets. And then you're going to have individual investors who are just going to want to look at some key metrics and, okay, this is fine. This is what the price guidance on this token is. This is what I'm going to buy it at, or this is what I'm going to sell it at, or this is what the historic return on this asset has been, and this is what is projected on it. this works for me. I can even pay a little bit more for it, and that works for me. And then you're going to have other people who are going to be like, we want to go through all the detailed information on this. We want access to all of this information. And so that's how we built the platform. It is for everyone. So while we super simplified your traditional PPM and put it in the form of a single web page, there is the document wall. There is detailed information. There are detailed financials, there are detailed offering docs, there are detailed asset performance histories and docs that are available. There's rent rolls, there's everything that you need to conduct your due diligence on an asset, along with boots on ground inspection reports, along with third-party appraisals, the whole 9 yards. So for people who want to run their due diligence, they can. For people who want to just look at the minimalistic data that they want to, they can also do that. This is 2 separate investors on the platform who I personally spoke with. One of them was complaining about how there is too much data in the form of that oversimplified PPM of sorts that we put together on the main page. And he doesn't need all of that data. He just cares about the key summary table, and he wants that to be tweaked a little bit so it's a little more efficient. And then the other investors like, oh my God, I need access to this, and this much more information. And I walked him through on, hey, you have access to all of this information. This is where you can get it. So you're always going to have all kinds of people on there, especially when you get into institutional investors, they're going to have their own set of DD requirements. And that's why we have to underwrite every deal as if we're investing in it ourselves. That's why we have to ensure that no asset makes it on the platform without our underwriting, which is extremely extensive. And that's why we have to cover not just the asset side of things, or the financial side of things. We also have to cover the legal side of things and the reporting side of things. And we create that entire DD package when we're originally listing an asset. We continue to update the information as the asset remains on the platform on a quarterly basis, as well as with real-time data coming in through all of these integrations that we've built in.
Yeah, that's fantastic. It's really good to hear. Anyone who knows us that listens regularly or is one of our investors knows how adamant we are about underwriting and being really thorough. And, as a professional who's lived in real estate, literally like your whole life, you obviously see the value in that. And I think it's a really important element that you're going to be bringing into AKRU. And I'm really excited for where you're going with the company, with bringing the transparency that blockchain can bring and offering as much due diligence as somebody wants. And I really wish you the best of luck in getting this thing to finally work that hasn't been able to work. I'm a big proponent and believer in blockchain and what it's going to do to revolutionize every area of our lives. So I'm really excited to follow your progress and really want to thank you for taking some time to be with us today.
Well, I've been thinking of Mohsin as the Kool-Aid man, right? He's busting through walls, like basically trying to stock market from scratch, which is a massive undertaking. And so, as real estate investors who, love liquidity, we appreciate the efforts that y'all are taking.
No, thank you. It's with all of your guys' support and with early adopters and believers like you guys, that really makes this work, right? Conversations like these, when your listeners listen to this, or when they hear about this, and when they understand how the platform really works, that's what really leads to adoption, and that's what leads to real change and real ability for people to bring in change in their investment strategies as well. So thank you so much for the opportunity.
Thank you so much. And we'll include the link to AKRU, and for people listening, that's AKRU.com, right? For
AKRU.co. So
.co.
Right there. Yeah. So it's right behind me. AKRU.co. Yeah.
Okay, great. Okay. And we'll make sure that is in the show notes. So Mohsin, thank you so much again. It's been such a pleasure to have you on the podcast today.
Thanks. This is lots of fun. Really appreciate it.